Dirty dealings, corporate battles, consumer wars. This is Evening 5. Engineering and construction company Gamuda has bagged contracts worth a combined value of 1.74 billion ringgit to build a hyperscale data center for Sime Darby Property at the latter's Elmina Business Park. A day earlier, Sime Property revealed plans to expand its business by constructing a hyperscale data center involving a 2 billion ringgit investment. The data center, set to be completed in 2026, will be leased to Pearl Computing Malaysia, a subsidiary of Singapore-based Raiden APAC, for an initial term of 20 years. In an announcement to Bursa Malaysia, Gamuda said its subsidiary Gamuda Engineering was awarded a contract worth 815 million ringgit by Sime Darby Property EBT Asset 1 to construct, complete, test and commission the said data centre. The project is set to commence next Monday and is scheduled for completion on February 27, 2026. Gamuda Engineering also secured a separate contract from Pearl Computing Malaysia for the fit-out, testing and commissioning of mechanical, electrical and plumbing works for the data centre, valued at 928.6 million ringgit. This is expected to start on July 1, 2025 and finish on September 9, 2026. These contracts are expected to contribute positively to the group's earnings over the next 2 years. Maybank saw its first quarter FY 2024 net profit rise 9.8% thanks to increases in both net interest income and non-interest income. The country's biggest banking group by assets said earnings totaled 2.49 billion ringgit against 2.27 billion ringgit a year ago. Net interest income rose 4.5% year-on-year to 5.24 billion ringgit. Non-interest income surged 78% to 3.05 billion ringgit, largely due to accounting gains of 995.5 million ringgit in the form of mark-to-market gains on revaluation of financial liabilities at fair value. Looking ahead, CEO Datuk Khairul Saleh Ramli said Maybank will remain focused on identified growth areas across group community financial services, group global banking and group insurance and takaful in its home markets. He added the lender is in a good position to exceed its set targets to deploy sustainable financing and decarbonisation solutions to its customers, from small firms to large corporates. In the first quarter of FY 2024, Maybank posted an 11.2% growth in gross loans, while deposits saw an expansion of 8.9%. Net interest margin declined 19 basis points to 2%, while gross impaired loans improved by 18 basis points to 1.32%. Loan loss coverage fell to 127.3% from 133.5% previously. Maybank's common equity Tier 1 capital was 14.87%, while the liquidity coverage ratio remained stable at 127.2%. A group of prominent Malaysian civil society bodies have reportedly started a protest against a bid by a consortium to take Malaysia Airports Holdings, or MAHB, private amid boycott campaigns against some US firms over the conflict in Gaza. Last Wednesday, a group led by Khazanah Nasional and the EPF announced an offer for the shares of MAHB it doesn't already own. Global Infrastructure Partners, which is in the process of being acquired by New York-headquartered BlackRock, is also part of the consortium. According to a Reuters report, around 22 organizations have issued a joint statement urging the government to reconsider and block BlackRock's participation in the deal, alleging the firm has ties with Israel. In a letter to EPF management, the civil society organizations, including the Malaysian Consultative Council of Islamic Organizations and Viva Palestina Malaysia, are said to have urged the pension fund to cease ties with BlackRock. The privatisation plan has also faced criticism from some opposition and ruling party lawmakers over BlackRock's involvement. BlackRock, Khazanah, EPF and MAHB did not immediately respond to requests seeking comment. IOI Corp, Malaysia's second largest palm oil producer, said its net profit fell 38% in the third quarter from a year earlier, largely due to currency loss and other paper losses. Third quarter FY 2024 bottom line stood at 123.1 million ringgit. This as it booked a net loss of 84.2 million ringgit on translation loss on foreign currency borrowings and deposits, 58.3 million ringgit in net fair value loss on derivative financial instruments, and 1.9 million ringgit net fair value loss on biological assets. All in, non-underlying items totaled 144.4 million ringgit. Revenue for the quarter slipped 7.4% to 2.46 billion ringgit. IOI did not declare any dividend for the quarter under review. The group said crude palm oil prices may come under pressure from rising seasonal production and the expected good harvest of substitute soybean in South America. The anticipated replenishment of palm oil stock by importing countries with low inventories, however, will provide support to prices. According to its forecast, palm oil prices may hover within 3,700 to 4,100 ringgit per tonne in the next 3 months. Malaysia's inflation came in slightly lower than expected in April, as increases at restaurants and costlier personal care goods were blunted by cheaper communications and clothing items. The Department of Statistics said the Consumer Price Index rose 1.8% last month from a year earlier. That's lower than the median 1.9% estimate in a Bloomberg poll of economists. The rate has remained unchanged for 3 straight months. The food and beverage group, which accounts for nearly 30% of the index's weightage, rose 2% year-on-year in April. Restaurant and accommodation services were up 3.5%, while the prices of personal care, social protection and other goods and services saw an increase of 3.1%. Information and communications fell 2.5%. Prices of clothing had declined by 0.3%, and financial services, including insurance, slipped 0.1%. Inflation for transport was 0.8%, while housing, water, electricity, gas and other fuels rose 3%. Core inflation was 1.9% in April, faster than March's 1.7% pace. The official forecast calls for a headline inflation rate of 2 to 3.5% in 2024 versus 2.5% in 2023, and core inflation at 2% to 3% against the 3% average last year.